Ethereum and Solana are currently the most important smart contracts platforms on the planet. Which one should you hold more of? Ether or Sol? Which chain should you build on? Which one has the brighter future? Well, Solana co-founder Anatoly Yakovenko recently faced off against Justin Drake from the Ethereum Foundation on the Bankless podcast on the good, the bad, and the downright ugly of their respective chains. The nearly 2-hour-long debate frequently veered off course, going down different academic rabbit holes, and at times got a little bit testy.
Is basic infrastructure in 2024 that you don't have. Solana is like fake it until you make it, an internet name system.
This is really weak.
It's not
useless.
Irrelevant. USDT for loans and savings.
Misleading bullshit.
Now, to their credit, this was a pretty interesting conversation between two clearly very smart gentlemen who disagreed on some fundamental ideas, which I think highlights their different worldviews, helping us appreciate the different ethos and direction which Ethereum and Solana have gone in. So in this video, I'm going to do a quick overview of the highlights. We're also going to dive into some data that might help you decide on which one might be the better hold in the long term. All right, without further ado, let's dive on in. All right, let's set the stage with some basic facts on Ethereum and Solana that everyone agrees on. You can find these diagrams that I'm showing here on my blog, which I'll link down below. So Ethereum optimizes for maximum decentralization and security, pushing its entire scaling strategy onto L2s. Now they have a long-term view focusing on infrastructure and ideas like monetary premium, positioning Ether as ultrasound money. More on that later. On the other hand, Solana optimizes for user experience by creating a blockchain that's fast, it's high throughput, low latency, along with cheap fees. And it wants to do all of that on an L1 only, no L2s needed. Solana is also a monolithic L1, meaning that rather than being modular, Solana tightly integrates and handles its functions like consensus, data availability, execution, all on the same layer. Solana is heavily focused on use cases, building products that people want to use.
We're succeeding in a lot of ways is because the developers are not infrastructure focused for the most part. They're focused on apps. So if you look at trying to get users, you need to give them something to use, right? Like that's fundamentally, you need to provide value to a user. And if you look at Solana, investment dollars are smaller than Ethereum's, but vast majority of them are going to products that are user targeting.
So that's the basics. Now, diving into the details, we started to see our speakers diverge in their opinions on a variety of matters, like who will win the chain wars, whether Solana can maintain its UX and tech advantage, L1s versus L2s, who has the better strategy, and which chain has better tokenomic design. So let's do a quick overview of that. First up, will we see a winner in the chain wars? Well, Justin sees things as a bit of a zero-sum game, with ETH coming out on top. In fact, he already thinks that Ethereum has won, and the chains, even Bitcoin, will eventually bow down to Ethereum.
The layer one space is winner take most. And so we need to ask ourselves, who is going to be that winner? Like, what are the shedding points? What are the structural advantages? And in my opinion, Ethereum has won. In the sense that it is the place with the most network effects, with the most liquidity. It is the one that is the most mature, the most secure. And so, that is maybe like the best compliment that you can give to Ethereum is that it's preordained in some sense, as Anatoly mentioned, to flip Bitcoin and become number one. This meme where there's this guy who says it's not just about winning, but everyone else needs to lose. Well, it's a little bit like that, just because of market dynamics. At the layer one level, the network effects are so strong that it makes it extremely difficult to be an alternative layer one. And I think this is one of the struggles that Solana will have going forward.
Now, in contrast, Toly sees blockchains more like back-end systems. That's not the be-all end-all, with builders and users migrating around as opportunities to create value and consume products evolve over time. All right, second, will Solana retain its crown on UI UX? Because right now, gas fees, transaction speeds, throughput, the general user experience of dApps have been superior on Solana. But Justin argues that once L2s get their act together, Solana will decisively lose its advantage.
How can we have the 100 millisecond user experience that Arbitrum and Base provide, but in a decentralized fashion? And it turns out it's not that difficult. And not only that, in some sense, it destroys the user experience of Solana, because Solana has 400 millisecond block times. About 5% of the blocks are skipped.
Speaking of L1 versus L2s, which approach is the better strategy for scaling? Now, Justin highlighted the clear distinction between the role of the Ethereum base layer and their L2s. Now, stepping back a bit, you might remember that the original plan for Ethereum, after its move to proof of stake, was to scale using sharding. But it turns out that the really rapid explosions of L2s has essentially moved the Ethereum Foundation to pivot their entire scaling strategy to L2s. So L2s is where dApp builders and users should go.
As a dev, should I launch on L1 or L2? Well, I'll answer that for you. You should launch on L2. There is no future for the L1 directly. The L1 is a settlement layer.
The problem though is right now, as an integrated ecosystem, ETH L2s they're a bit of a hot mess. They're fragmented, with liquidity spread around across competing L2s, and the user experience just not there because, well, bridges are kind of annoying. Now, Justin argues that fragmentation is a problem, but it's a temporary problem, and eventually L2s will meld together alongside the base layer to create a seamless experience. But it's not going to be easy. Alongside the massive coordination that's needed to bring together different L2 solutions, who all have their own teams, agendas, communities, ecosystems, Ethereum needs to develop a few key technologies like shared sequences. Now, this ensures consistency and prevents double spending across different L2 chains by maintaining a unified transaction history. You need pre-confirmations, which provide users with quick feedback that their transactions are going to be included in the next block. Very important for user experience. And you need real-time snark proofs, which almost instantly proves that a transaction is valid, solving a major UX headache with optimistic rollups at the moment where fund withdrawals can take days.
The L2s are like silos. There's fragmentation on Ethereum. But my vision is that we can fix fragmentation, and there's a whole Bankless episode on that, whereby the silos basically meld together. It's almost like what we're left with is the boundaries between a smart contract. You could argue, for example, that Aave and Uniswap being separate smart contracts are in some sense siloed, but really you benefit from synchronous composability. So synchronous composability is the strongest form of melding and removal of the frontiers. Now, it is true that it's going to take significant amount of engineering to get to this magical land of synchronous composability.
So here, Justin explains how once the tech is in place, Ethereum can finally go off in theory and completely bust up the current network of disjointed, siloed L2s and make the base Ethereum L1 and all of its L2s one tightly integrated family, thanks to the holy grail of synchronous composability. Transactions are going to be fast, they're going to be cheap like Solana, yet with the benefit of Ethereum's network effects, security, and decentralization. But this will be a long-term project. It's going to take years, which means Solana and other chains, even Bitcoin, has ample time to establish itself as potentially the top smart contracts ecosystem. Now, just out of interest, Justin viewed Solana's focus on building out a fully decked L1 to be both a pro but also a massive con.
One of the things that I think is ugly is the fact that Solana is an L1. The mental model that I have is that it's decided to create an island in the Pacific as opposed to being connected to Wall Street, right? There's existing network effects. These are extremely strong network effects. And it's by being an L1, you don't get to tap into these existing network effects. And now if my thesis is correct, that the L1 is going to take most, and Solana is not gonna make it.
And he even took a swipe at the level of degeneracy in Solana's culture and community, which I thought was a little bit below the belt. Let me know what you thought.
When you have an exotic island, you have exotic life forms that emerge. You have weird things like geo-bodens and dog with hats and all of these things. And, you can have, circle jerking within this little island where everyone's like happy, worshiping these little images. But even Solana, which is like the primary place for meme coins, is still minuscule. Look, Solana has tens of thousands, if not hundreds of thousands of meme coins. If you take the sum of the market values of all the meme coins is about $10 billion. On Ethereum, you have one meme coin called Shiba Inu, which is $15 billion, a single meme coin. And this is where we see the distinction between quality and quantity. Anatoly and Solana is going in for quantity, and at the expense of all sorts of things that are more important in the grand scheme.
So just because.
Now, technology-wise, Justin argued that Solana focuses too much on technology, and technology can't be an evergreen moat because, well, it's easily copied. This means any tech gaps between Solana and competitors close up over time, nullifying Solana's technology advantage, which is especially a problem for Solana because, again, he argues Solana focuses too much on technology.
I think of Anatoly as a pure technologist. I am grateful for like all the technology that it has provided. But from my perspective, like blockchains are one of the most multidisciplinary kind of creatures that exist out there. And it's more than just about the technology. It's about the culture. It's about the mimetic forces. It's about economic forces. It's about network effects. It's about forces that are way larger than just pure technology. Anatoly is building open source software, coming up with new virtual machines, new networking technologies. All of these things have little moat. They can be copied very easily, and they are in the process of being copied on Ethereum L2s today. What is difficult to copy are network effects, mimetic forces, brand, reputation. This is what will stand the test of time.
Now, there are parts of that argument I don't quite agree with, but there you go. At the moment, however, I don't think many people disagree that Ethereum does have a good amount of technical debt, something that Holy did rub in a couple of times during the debate, for example.
EVM is really like designed by academics. It's just a VM that like no one with VM experience would have ever built. So it has a lot of technical debt, like design debt. It's fixable, but it's like blood, sweat, and tears to do that. And I think you're going to see very slow progress there.
Finally, on the economic side of things, Tolley argued that Ethereum's fixation on being ultrasound money is one of the worst parts of Ethereum that ends up sucking the soul out of the ecosystem.
Ugly parts on Ethereum that are not fixable is this focus on ultrasound money and like decentralized money. And this is what pigeons it into a specific direction, which means you're trying to build the lowest, smallest possible L1. And it's very, very hard to do that and do all the execution on all these L2s and have any value capture on the L1. Execution is what makes money. Is when you have priority fees, people competing for content, they want this particular dog coin versus another one, they're willing to pay extra fees to be there first. That's all in the execution layer. That's where all the money's made. And that pays for a normal user that doesn't care about whether they land in this 400 millisecond block or the next one, and they just want to pay for a mobile phone. To that user, they don't give a shit. Like when they click that purchase button, they don't care if it takes extra 400 milliseconds. So their fees are fractions of a penny, right? Does this make sense? This is all because execution is able to capture high average fees and provide a low median fee. That's really, really hard to do in the settlement part. And when you move all the value capture away from the L1, what are you left with? It's just trying to compete with Bitcoin and being the most better money. But that is not like real. It's a meme. Like decentralized money, like I agree is important. When my parents fled the Soviet Union, had these technologies existed, they would have preferred USDT on Tron. This like decentralized money meme is like puts you into design decisions that are all kind of like ruin the cool part of the network.
So we can see that Tolly thinks the idea of prioritizing what's called economic premium, such as positioning Ether as a store of value, encouraging people to hold Ether as a valuable asset, like Bitcoin, only serves to hold Ethereum back and, well, essentially poison its potential. Now, let's take a brief interlude from the debate and dive into some of the numbers to see how Ethereum and Solana are stacking up at the moment. First up, quick look at price action. So here's Ether USD, big dump after, well, the Fed jacked up rates 11 times in 15 months. And central banks began withdrawing liquidity, right? Quantitative tightening, all that good jazz to try and curtail inflation. And then things began picking up again, particularly going to late 2023. And this was off the back of the Bitcoin spot ETF narrative. So nothing too crazy here. Now, moving on to Ether against Bitcoin, we see that Ether is down 50% against Bitcoin since the last bull market. But again, not a huge surprise given the rotation of capital to off-risk assets during a bear market. Not to mention that overriding narrative, which has been Bitcoin ETFs. All right, now moving on to Solana now. Well, Sol's been on an absolute ripper of a tear since the FTX collapse, resurging after its brush with death back in late 2022, really outperforming every other L1 with a fairly decent market cap. Even against Ether, right, we saw Sol pump a whopping, roughly 700%. Incredible. Now, with that said, I still think in the shorter term, and I mean by shorter term, the next couple of years, Solana has potentially more upside potential given its smaller valuation, right? 70 billion against Ether's 400 plus billion market cap, along with Solana's focus on product, right? Great apps, great products, and a user experience that's just going to keep driving user adoption, vibrant use cases, and, well, a good amount of attention. But there is no doubt that Ethereum has enormous network effect, proven security, institutional backing, especially now with the Ethereum ETFs in play. And hey, look, I think Ethereum is going to get particularly interesting once the entire ecosystem can get that house in order and improve that L2 experience. But it's probably going to take a while. With that said, like many crypto investors, I hold both Ether and Sol, and I can't see that changing anytime soon. Next up, let's talk about TVL, total value locked. Now, this is the overall value of assets deposited and locked into DeFi protocols on the chain. Now, TVL does have issues as a metric to measure chain adoption and traction because, for example, TVL by default doesn't include liquid staking because, well, that's not locked. So here on DeFi Llama, I have manually included, I've thrown in liquid staking assets on protocols like Lido and Jito. Still, Ethereum continues to dominate, right, with almost 15 times the value over Solana, $110 billion versus 8, and I haven't even began including the L2s. With that said, 8 billion for Solana is still quite a substantial amount of capital, and it puts Solana up there among one of the top chains for DeFi. Interestingly, in the debate, Tolly and Justin shared some testy words on the merits of TVL.
Now, let's look at concrete numbers, and I think these are extremely telling. You have Solana, which is a 4-year-old project. How much USDT has it accumulated? It's accumulated under 800 million, which is about 0.7% of all the USDT. Now, let's look at for comparison on the L2s. A single L2 Arbitrum, which is only 3 years old, has 3 times the amount of USDT. Why is that? Because they are connected to the epicenter.
TVL is irrelevant.
It's not
useless.
Irrelevant. It's not useless.
It is. How much revenue is Arbitrum making off of that? A bajillion in USDT. Like who cares about it?
I have no idea, but it is a sign that people are using USDT for loans and savings and payments and all sorts of all the reasons that USDT is used.
That's actually like very, very misleading bullshit. Amount of TVL in a protocol is meaningless. Big data protocol had 6 billion TVL. What happened? That was an Ethereum protocol that had like a big run last cycle. Doesn't exist anymore. What happened? I thought TVL is really important.
Look, the reality is when you place too much emphasis on TVL as a metric, projects are going to be incentivized to optimize for these metrics. So put it another way, you can have poor product market fit and an underwhelming real world adoption, yet you can still look pretty good on paper when it comes to TVL. Anyway, let's move on to some other metrics now. All right, diving into Artemis now, let's check out some metrics focusing on wallets, transactions, and DEX volumes, and that's going to give us a more nuanced picture of traction and user adoption on Solana and Ethereum. So the first thing I'm going to do is on 3 of these graphs, I'm going to filter away the chains that I'm not particularly interested in for this video. So we just want to leave Solana and Ethereum. Right, so daily active addresses, daily transactions, and also DEX volumes. Yeah, Avalanche and Aptos. Okay, so going up to the top daily active addresses. So this is the number of wallets interacting with DeFi protocols each day, right? And then we have daily transactions. And look, Solana's doing really well, right? Really, really well here versus Ethereum. 3 to 4 times the daily active wallet addresses, up to 2 million wallets a day, along with 30 times roughly more transactions each day. And hey, if you've used Solana, right, that shouldn't come as too much of a surprise, as Solana has a very vibrant Web3 scene. There's tons to do in both DeFi and NFTs. The user and wallet experience is really fantastic. Transaction fees are dirt cheap, they're fast, albeit there is the occasional outage, although Solana is getting better in that front. And overall, there's just a lot of activity going on Solana, which is reflected here. But there are caveats. Right, Ethereum is becoming the settlement layer of the ETH ecosystem. So lots of activity is moving on to L2s like Arbitrum, Optimism, Polygon, Blast. Also note that Solana counts certain certain activities as transactions that Ethereum doesn't, right? And also there are a good amount of activities on Solana that are kind of like bot transactions with little value, right? Just because the chain's so cheap and fast to use. So the point I'm making is these numbers here might exaggerate Solana's user adoption a little bit more than you think, but at the same time, they certainly paint a fairer and rosier picture than looking at TVL, total value locked, alone. Now, another good metric to use is DEX volume, right? A good way to measure economic activity. And here we see Ethereum and Solana actually fairly neck to neck at times. Actual activity on Solana is more than this because there's a ton of meme coin degeneracy that's been happening on Solana on a protocol called pump.fun, and that's not reflected on these charts here. All right, let's now zoom into NFTs. Now, NFTs have evolved quite a lot since the 2021 bull run. So back then it was all about PFP collections with very little utility. The typical right-click save JPEG memes. But these days, NFTs play an increasingly important role in making Web3 products work the way they should, because NFTs is how you own something, right? It's the vehicle for verifiable decentralized ownership on the blockchain. So whether you're looking at items in a blockchain game, a Web3 game, GameFi, or you're using a dApp that needs to provide some sort of token-gated experience or service, it's going to be NFTs that make it work. All right, now if we dive into the numbers on the block here, so I'll filter for Ethereum and Solana, 2 chains I'm interested in. The short story is Solana holds up reasonably well against Ethereum when it comes to NFT trade volume. If you dig a little bit deeper, right, and look at the number of transactions and the number of users, things look even better for Solana, right? Partly because the fees are so cheap, especially now with Solana's compressed NFT technology. If you're interested in Ethereum and Solana's NFT scenes, check out a really huge deep dive video that I recently put out. Cool. Well, we've just looked at a bunch of numbers that focused on the user side of both chains. let's now dive into some of the numbers on the developer side, right? Those who are building on Solana and Ethereum. All right, so I've pulled up the dev activity for Ethereum, and this is the entire Ethereum ecosystem. So that includes activities on both the base layer and all of its L2s. Now on the left chart, we have the number of commits, right? So these are essentially the changes that devs are making to the code base. And then on the right, we have the actual number of developers. Color-wise, purple refers to the number of core devs. So these are developers more likely to be working on infrastructure. And then the green represents devs working in the broader ecosystem, more likely to be working on the ecosystem of dApps. So on Ethereum, we currently have around almost 400 to 500 core developers, and roughly 2,000 working in the broader ecosystem. And you'll see trend-wise, both commits and developers, they have been trending down since the 2021 bull run. And look, that's something you're going to find for a lot of chains as we headed into a bear market, and new narratives outside of crypto, such as AI, began pulling devs away. All right, so if we flick over to Solana now, we see a similar trend. To me, the main differences are Solana's dev numbers overall are a bit smaller than Ethereum's. There are about 150 to 200 core devs working on Solana, and around 300 to 400 broader ecosystem devs. And also there are a higher proportion of core developers on Solana. Overall, Ethereum, it has the bigger dev community, but we continue to see a lot of things being built out across both ecosystems. Now, to wrap things up, I want to head back into the debate. I want to say that if you have 2 hours, do consider busting out the popcorn and watching the entire video. Bankless is a great channel when it comes to tackling the meat of blockchain and Web3 projects. Now, some of you may remember a notorious Bankless episode in late 2022 where it was on crypto regulation, and Sam Bankman-Fried went head-to-head against Eric Voorhees, and Sam revealed himself to be a bit of a crypto and DeFi regulation advocate, which almost immediately shifted sentiment against him among the DeFi and libertarian crowd. Now, ironically, at the same time, FTX's own accounting was secretly in dire straits. Right, less than 2 weeks after the debate, FTX declared Chapter 11 bankruptcy with a huge gaping hole in its books because, as it turns out, that they were just as big of degens when it came to accounting, risk management, and investing as the rest of us. Now, in this episode with Justin and Tolly, there is some general structure in how the conversation went, in case you're interested in watching it. Generally, the pace of the conversation, the vibe went from good towards bad and then to the ugly. Now, what I mean by that is hosts Ryan and David first asked the speakers to talk on the good on each other's blockchains, right? And then the bad, meaning current problems with Ethereum and Solana, which are fixable, right? And then the ugly, problems with Ethereum and Solana that might just be too difficult to fix, either because of underlying technology, a fault in the project's philosophy, as argued by the debaters, or maybe just a sheer amount of technical debt. So you can imagine the episode starts off fairly cordially between Justin and Tolly, before getting more heated as time rolls on. Now, to be transparent, they couldn't agree on some pretty fundamental things, right? They went down the rabbit hole on a variety of different topics. They got bogged down arguing semantics at times, and although they never threw insults directly on each other's character, they did fling some nice stingers on each other's chains. Now, some of the rabbit holes that Justin and Tolly went down included squabbling about numbers related to MEV and validator yields and incentives. Now, if you don't know what MEV is, check out a recent dive, a huge dive I did on Bitcoin innovation. I explained things there. The debaters also got bogged down over whether token issuance and the selling pressure that comes from that was a cost to the network, which Justin tried to convince Tolly using examples on taxes.
There's a couple of bad takes, Anatoly, that you have been spreading, which hopefully this podcast can help you spread less. One is this idea that issuance is not a cost to the network. Now, there's a very simple reason why it is a cost, and it has to do with taxes. My assumption, Anatoly, is that you pay your taxes. Is that correct?
Of course.
Okay, so if you were to stake and you were to make, let's say, $1 million of income staking, you would have to, my understanding is that you're based in California, and I looked it up. The income taxes in California is roughly 50%. So you will have to pay $500,000 of income taxes on your staking. That is direct sell pressure. That is a cost to the network. Now, Solana is roughly speaking a $100 billion network.
Sell pressure is not a cost. Because
Wow, we have to go into this. Okay.
Wow.
sell pressure is a local event that's temporal, but the value of the company is based on Apple. It's based on their future cash flow. And in the US, the monetary market will expand to capture that value. Somebody will go buy all that stock because the future cash flow of Apple is worth so much. So like selling Apple stock is not a cost to Apple. That's like obvious to everyone.
So yeah, totally just didn't agree that sell side pressure was a cost to the network. The two gentlemen also dived into economic security, and this goes into how a chain or its dApps set up its financial incentives to protect the network. Now, Justin wasn't terribly happy that Tolly kept dismissing economic security as a meme.
Why like this meme is bad is like you're using it as bad marketing. Ethereum has World War III level economic security. It's bullshit. Because one, I can't tell looking at the stake, and there's no way you can prove to me that all of that stake didn't come from the ICO.
No. So I think we've agreed that economic security is not a meme because it is relevant to this one specific, because it is relevant to this attack called censorship.
It's a meme because that
failure.
attack is every network, proof of stake network does as good of a job defending against that as Ethereum mainnet. This meme is benign in Ethereum because Ethereum does a really, really good job with engineering. And they actually do have a lot of validators and a lot of links and independent clients. All that stuff they do. It's a dangerous meme for everyone else because people will, like Luna, will roll up to some absurd number of stake and say, we have massive economic security, where it's like not real in any way. And that gives people false confidence. I would actually what I would wish Ethereum would do is just like, forget that meme, just talk about the really excellent engineering. Like, these attacks are impossible because the engineering is really, really good.
So Luna is incomparable. Like they were building a stable coin and the design was just flawed.
But their TVL, the amount of stake that they had staked to secure their proof of stake network was massive. And they could literally just go say, we have massive economic security.
Now, speaking of memes, over the 2 hours, Tolly kind of trivializes a few different matters, reducing them to memes, which Justin didn't appreciate. So hey, if you have 2 hours, if you have the time, I do encourage you to watch the whole video. There were some pretty special moments in there. All right, I'm going to leave things there. If you enjoy the video, please drop a like to help me spread the word. Let me know which chain you're more bullish on. I'd love to hear from you. Stay safe, keep learning, and always watch your risk. I'll see you next time.